Yeah, good morning once again. Can I get a thumbs up if you can hear me? Anybody to give me a thumbs up? All right, great. Great. Thank you very much for your time and thank you for joining us today. My name is Ernest Ledu Owusu. I'm pleased to welcome you to the November edition of the Black Star Market Color. We are just about wrapping up the year. December's Market Color is going to cover the entire 2025 under review, and then we would also look at the outlook of 2026. But for November's edition, which happens to be the penultimate edition for Market Color for this year, we are going to concentrate much on the 2026 budgets. But before that, we would give you a little bit of where we have come from and what the current status is, then what the outlook looks like. So as you can see from the projected slide, today's session is a very timely one. The 2026 budget has just been delivered and across the market from banks, fund managers, pension trustees, individual investors, and even corporate treasurers have a lot of interest in the budget. And this looks like the budget which is desired towards changing the direction of our economy and trying to consolidate the gains that we've made in the past. We've dubbed it Policy, Performance and Prospects, a market-oriented review of the 2026 budget. What makes this particular presentation different is the fact that we are not seeking to repeat exactly what the minister read. Instead, we will focus on how the measures announced are shaping real economic activity, the financial markets in which we are playing, and the investment environment as a whole, and what market participants like yourselves should expect going into 2026. So in the course of today's session or presentation, we would cover current policies that have influenced the macros like inflation, interest rates, and liquidity as well as credit, the expected income of the 2026 fiscal and revenue strategy, implications for the bond and equity markets, some opportunities, and then also risk for institutional investors and the broader outlook for Ghana's economic direction. Leading today's presentation is going to be one of our finest. He's a senior analyst at the desk, ESL. He would break down the macro signals, the market reaction so far, and also some forward-looking pointers that he will be sharing with us. So as always, please feel free to drop your questions or comments in the Q&A box or chat window as we go along. We would address them right after the presentation. Also, if you feel like unmuting yourself and then sharing your views or contributing to the discussion, we can easily do that by you raising up your hand after the presentation so that when you get called, you could chip in your contribution. After the presentation, we would also do a very quick poll just to elicit your views on a few things that we will be discussing. So without wasting much time, we will just go directly into the presentation. So this is the point where I invite Isaac to lead today's conversation.
All right, thank you very much, Ernest. I hope I can be heard.
Yes, absolutely. Proceed.
All right, thank you. So, good morning, everyone, and thank you, Ernest, for the warm introduction. This morning, my job here is very simple. It's not to bore you with a long talk like Ernest mentioned. The goal of the presentation is very simple. What does the budget mean for the economy? What does it mean for markets? And then ultimately for investors? And at any point in time during the presentation, I would want just that to be a focal point and do not get lost, but just follow the story as it goes. To kick off the presentation, in investments, I'm sure most or some of us have heard that past returns are not indicative or reflective of future returns, or they don't guarantee future returns. However, in this case, where we are looking at a moving document, a living document, such as a budget, it is important to actually establish what led to them having this budget, what has happened in the past, and then probably we can look at what the government seeks to do in future. So moving to a backdrop, This budget is critical because the government's first fiscal plan after a reset agenda, which was 2025, they set a reset agenda, which they gave us the budget for. This budget they're about to implement or about to approve is very key because after the reset agenda, what's next? There was a tone that was set before 2025, which was 2024 before the NPP government left power, and there were a few macros that were very dominant in the news. Inflation at the end of 2024 was around 23.1%. Inflation had they had a target of 19.5%. That's the IMF. NPR was around 27%. GRR was 29.31%, reflecting the high interest rate environment we had, which also um, trickled down to the non-performing loans and other issues the banks faced. Import cover was also about 2.90%, which also was a miss. The IMF projected a 3.6 months cover at the end of 2024. Currency had depreciated and stood at 14.7 cedis to a dollar. The average T-bill rate was also 28.7. Debt had risen. And then GDP was about a 5.20%. This was what the incoming government, that's the Mahama-led administration, termed that the economy was in a bad shape, hence they were going to reset the economy. There were a few policies that government set to do, and this led to the 120-day social contract the president did lay out. And in all of them, I think he's been able to achieve quite a number of them. Having the leanest, most efficient government in the first 90 days, he was able to do that. Hold a national economic dialogue, which I think the finance minister championed that. The 24-hour economic policy is something which is dominant in the 2026 budget, hence I wouldn't really talk about it here. E-levy, COVID levy, and then 10% levy on bet winners. These were campaign promises also that the government was keen on achieving or keen on delivering this promise. Based on these promises, the finance minister first went to the parliament somewhere in March and gave his first budget. And the first budget gave a deficit of about 56.9 billion cedis, and also proposed 21% increase in revenue generation, and then a decline of about 4% when it comes to expenditure. Mid-year, he came to Parliament again and revised these figures, reducing the deficit to about 52.6 billion cedis, of which you saw revenue increase about 16.4% of GDP, and for expenditure also being 20.2% of GDP. Now to the most important question. We've come so far in 2025. We've done 3 quarters so far, and we're in the 4th quarter. Did the reset agenda, their reset agenda deliver the intended, which is the macro target they set, were they able to achieve them? The promises they gave out, were they able to fulfill those promises? Looking at the revenue, they decided to raise. You see that revenue came short by about 7.63 billion cedis, which is 5% below the target. Fall was noticed in the non-oil tax revenue. We saw oil and gas receipts also decline, and then for grants also we saw the decline. This year, the markets have actually been a very interesting one when you look at these indicators. Looking at the revenue also, I remember when the minister came to Parliament earlier this year, he did talk about abolishing certain taxes such as the e-levy. And in his presentation in March, he did mention that about 3.8 billion cedis was going to be lost in terms of revenue when e-levy is abolished. And some analysts even estimated more than that. However, if you look at the miss of 7.63 billion, would you say that the government was right in cutting this expenditure? Because looking at this, you realize that an addition of 3.8 billion cedis to revenue would actually bring the shortfall down to around 3 billion cedis also, which would have helped the government meet meet certain tax obligations or certain expenditure obligations. But well, we'll talk about that later. And there's also good news, which I think I'll talk about now before I get to the main budget. For this revenue, we do see so far we haven't considered our gold revenues, and it will be good to also look at our revenues in that sense. Good news is that the 2026 budget did mention that the government was going to undertake a GDP rebasing and then to reflect the economy today. So that's also good news. For expenditure, government expenditure also went down, and this is no news because if you aren't able to generate more, you definitely reduce your expenditure. And the place when you look at this charts, the sector which suffered the most was capital, that's capital expenditure. The budget stated that we're going to spend an amount of 26 billion CDs with capex. However, they were able to spend 10.9 billion CDs. This is because there were other non-discretionary expenses such as compensation to employees and then interest payments. You cannot tell me that you would use much of your revenue to undertake capex projects while your employees are not being paid. So that was also a highlight of the budget. They set various targets at 25 in the 2025 budget. Inflation was set at 11.9%, at which when they set it, we all thought it was quite ambitious. Currently, inflation starts at 8% in October. 4% was real GDP for 2025. That's the target. Currently, at the end of Q2, we had GDP grow at 6.3%. The primary balance was also estimated to have end the year at 1.5%. Currently, we have it at 1.6%. Import cover was also estimated to be equal to 3 or more than 3 months, and we have it at 4.5 months currently. So this basically gives the picture that the government was able to meet its macro targets. And even looking at the IMF targets across all these indicators, you realize that government has done very well in terms of managing the economy. Moving into the 2026 budget, which is the topic for now, which is resetting for growth, jobs, and economic transformation. When the minister released the flyer, this was the quote on it: through your resilience and sacrifice, we have stabilized the economy, and now it's time to grow, to transform, and to build the Ghana we want. This obviously gave the picture that it was time to spend. We have gone through, if austerity is not too much of a word, I would like to use it. We've gone through a bit of fiscal austerity where we've not spent that much, and we've been able to build enough buffers and stabilize the economy. And the minister is now saying that it's time to grow. It's time to grow means that I think in the budget you could see that they were adding about 800,000 new jobs, 490,000 coming from the Big Push agenda alone, and also having a section where there's inclusive banking for women that's allocating about 401 million cedis to that initiative. But well, let's go into the details. What targets they set in 2026? In 2026, they set a target for inflation at 8 plus or minus 2%, which is not far from what we have now, meaning they want to keep it as it is. Real GDP growth at 4.8%, which is probably conservative from what we have now, and that's 6.3%. Primary balance minimum of 1.5%, and then an import cover still being equal to 3 months or more than 3 months import cover. S&P gave a target of 2026 ending with 9% inflation. S&P also says that our GDP target for 2026 is also 5.3%, 1.5% for primary balance, and then 3 months for import cover. It's worth noting that in the 2026 budget also, the finance minister did make certain projections saying that from 2026 to 2029, all macro targets were actually going to remain same, except for real GDP. So he's just saying that as long as he's in power, inflation is going to be below where it is, and then we would have our GDP also grow. With the budget, we all know there's a big word that comes with budgets: deficits. Governments have always had deficits over the period, and there's no news in our world. Unlike recently, where I think Argentina also have recorded a budget surplus. Budget deficit over the period from 2008 to 2025 has been on an average of 18.8 billion. The highest we saw was in 2008, 2024. And in 2025, we actually had a proposed deficit of 43.8 billion cedis. In the past, we always see that even though these deficits are given, these deficit targets are given, governments are found to exceed these deficit targets. 2025 is still not complete, so we would know much about it when the minister goes back to Parliament. In the 2026 budget, this was the key highlights. You realize that deficit was around 34.4 billion cedis. That's about 40% reduction. That's 40% decline from the March 2025 budget, which is very impressive. For expenditure, I mean, it will definitely go up, which I'll talk about in a subsequent slide. Revenue was also projected to go up. But for this deficit, it's something I would want to talk about. This deficit has an intended plan, and this deficit is actually on a commitment basis. But on a cash basis, we have a deficit of about 64 billion cedis to cover. And for the deficit plan, the minister did mention something about the foreign net financing, which was about 6.6 billion cedis. However, this foreign net financing is actually not inflows. It is technically, let's say, a net repayment of our foreign debt components, basically. So this is not an inflow. Typically, what the minister is saying in simple terms is that this deficit we are seeing, or the deficit of 64 billion in cash terms, is going to be financed domestically. So all the money we are going to use, or probably you would expect to use, are going to be raised domestically. Out of the 71 billion includes maturity. So in the subsequent slides also, I'll show a bit of the maturity profile and I'll make reference to the slide. There were some key themes when you talk about the 2026 budget. Some of them were the VAT reforms, debt management, big push projects, gas infrastructure. For VAT reforms, they look at finally abolishing the COVID-19 health recovery levy, looking at decoupling the GET Fund and NHIL levies. They also look at reducing the effective VAT rate from 21.9 to 20%. Also raising the VAT registration threshold from 200,000 to 750,000. These are all impressive things that the government actually wants to undertake. For debt management, the government also wants to resume benchmark bond issuance in 2026, which aims to rebuild investor confidence. For the gas projects, this is something I do find interesting personally, because having issues with power, we've already known that the country has had issues with power, and we've also had to import fuel for the running of these power plants and lights. Gas already we know is generated locally. We have quite a number of inflows from that side, and the government seeking to build a new power plant, a new state-owned power plant, and having a gas infrastructure is very impressive, because first of all, gas is environmentally friendly, and secondly, this would actually imply that the demand for FX in importing crude to actually power the country is actually also going to reduce. So this is a very key infrastructure, key initiative that I'm looking at going forward. There's also the National Oil Palm Policy. This is also a good policy by the government, which 2026 I also be looking out for. This policy is actually something the minister said was going to start from 2026, and in between 2026 and 2032, they were going to develop a national policy to transform the oil palm industry. This would also help diversify our dependence on cocoa and gold, as we've seen it. Generally, all these things are good. And when it comes to allocation of cash, also, this is just an allocation, some allocation to key policy initiatives. They are looking at doing about 9.9 billion for the Get Fund, 4.2 billion cedis for free education, about 1.98 for school feeding. These are basic expenditure for government. There's a Mahama Care, which is also a new thing they've brought, which looks at supporting the needy, those who can afford basic health care, maybe those with kidney issues and then the likes. 2.3 billion cedis was allocated. A new initiative which I also would like to highlight is from the road sector, which is the Big Push infrastructure. The Big Push looking at establishing or developing our first expressway, which is the 6 lane in Ghana, which I also find impressive because I mean, if not for anything, this government will remember for that road, if not for anything. There's also retooling of the Air Force, the public sector safety. There's also cash allocated. So in generally, these are monies allocated to various sectors. This is just a breakdown or maybe a high-level overview. With everything I've said about the 2026 budget, this Sankey is supposed to give us a high-level view of the government's fiscal position. This chart is very interesting because the government goes ahead to cut various taxes, which I did mention earlier, that they are cutting taxes. They are actually abolishing taxes, e-levy, COVID levy, and then the likes. But when you look at this Sankey, all you do see is the chunk of government's revenue comes from taxes, which is not news. Company tax alone is contributing 58.3 billion cedis to government's revenue. Other taxes such as VAT is contributing about 53 billion cedis to revenue. Other domestic goods and services also giving 32 billion cedis to revenue. The import duties and non-tax revenue are quite little compared to the company tax. And when you look at the other side, which is the red side, compensation alone of government employees has gone up to about 90 billion cedis. This is something which we or I see very interesting because if as at 2025 your compensation was around probably 60 and you couldn't meet your capex gains, your capex expenditure of about 20 billion. This year, your compensation has gone up. As in, sorry, 2026, your compensation has gone up to 90 billion. Your capex has also been increased to 57.53 billion from 20 billion. This is very interesting when I hear governments cutting or abolishing certain taxes. But well, they claim or the minister says that they've actually had strong buffers and they are also trying to do issue ones and build enough reserves to be able to cater for these expenditures. So I would also leave that for the minister to do with. There are a few risks which I would like to mention here. There's a debt trap risk. So if I say debt trap risk, I'm referring to the interest payments being significantly higher than the capital expenditure. You'd realize that we have an interest payment of 57.71 billion cedis, which is a non-discretionary expenditure actually. So we do not have a say in that. We will definitely have to do that. For our capex being 53%, 57.53 billion cedis, this is likely to suffer because if you are having to pay interest payments of 57 billion and your revenue is not enough, you would have to cut down on your capital expenditure. So that's that's the risk that the government faces on this front. What lies ahead, which is also another risk, the maturity profile we've seen in previous presentations. If you are familiar with last star presentation, I'm sure you've already seen maturity profiles. This is an updated one. You would see in this chart that 2026 alone has a chunk of the maturities, which is also no news that the minister did mention that of the 71 billion cedis net financing, some was going to go into rolling over maturities. 2026 is very obvious. You see this saying that government has been locked out of the foreign markets for a very long time. Hence, has been very dependent on the local market for funds. Going forward, that is not going to be news again because next year they will have to look on the local front. The minister has said in various interviews that they are not interested or he doesn't have the appetite to be in a hurry to go to the foreign market to raise funds. So hence, it also gives the picture that they are going to continue depending heavily on the local market, which poses a bit of risk because in 2027, 2028 alone, they are going to have 37 billion and 34 billion to pay. If probably a quick suggestion, if government was to look at even issuing these bonds or issue new bonds, probably they could spread them out instead of crowd in a lot of their sourcing for domestic, which will actually be short term because for T-bills you can't go beyond 364. Ghana has had various cycles. If I say cycles, starting from the 2000s when we had the HIPC from Kufuor's government, we've already had various cycles, which it's not news again that government has been to the IMF 18 times. While undergoing the mid 2000 HIPC initiative, which was about 4.3 billion cedis in debt relief, in 2022, it's very alarming that we went back from 4.3 billion in 2000, we went back to restructure about 17.3 billion worth of local currency and then 28 billion worth of foreign currency debt. This is actually, if I was an employer, I would say it's a bad CD for the government. But as of September, the summary of economic data does state that domestic debt was about 51.48% of public debt, which is also good. From the previous chart I showed, it's very indicative that government has moved much of its debt to the domestic front, which you also see at the end of the chart here, where you find out that the lines are actually changing hands. The red line being the external debt to GDP coming down, and then the domestic debt to GDP going up. It is worth noting that if this continues, there are two risks which are also pending. The first risk being that debt management is going to be a very big problem, and the second being FX risk. When I talk about debt management, this government in the 2026 budget has also mentioned that it is going to curb slippages, going to do AI for the ports, talking about revenue collection and then the likes. But if the IMF program is indeed ending in May next year and debt payments are going to resume, what will happen to our currency? And this debt, external debt to GDP we see for foreign debt coming down, it's basically hinged on FX. And if debt management is not going to go as planned, if debt repayment is going to resume in May next year, what happens to currency then? If currency actually goes out of hand, we will also see that our debt to GDP for foreign external debt would go up. Let's also go back to our cap. Earlier this year, we realized that IMF gave caps for loan disbursement when it comes to the minister spending cash. For bilateral loans, it was capped at $250 million, and for multilateral loans, $300 million. In past or in recent interviews, the minister was bashed by various entities, saying that he was being an accountant as he is by not giving them money to spend. However, the minister is confined into spending or disbursing loan to a certain cap. However, from next year going, this cap also goes. Will this mean that their policy to instill a fiscal council or have a value for money office is actually going to take effect and also curb expenditure? We've also seen in past times that, like I made reference, whenever the IMF is with us, we've always had a government being a good boy. And in the cases where IMF has let us, we've seen currency go out of hand, we've seen inflation go out of hand. In this case, will the risk of currency be a talk, or will they actually come to fruition? I've said a lot about the 2026 budgets, and this is where I come to why, as industry players, we have to pay keen attention to certain things or certain themes that run through the 2026 budget, which leads me to the benefits and the drawbacks of the budget. Sorry. Does the budget address our problems? That's the question I would pose to audience. And I categorize the benefits into three areas. for households, as individuals, as businesses, and then for investors. For individuals, price stability and purchasing power is something which is very key. They've said they were going to increase salaries next year for government workers, I think about 9%. But if inflation was to stay same, I mean, households were going to be good to do because I mean, why not? They can plan ahead. There's a tax relief component of the 2026 budget, which is the COVID-19 levy being scrapped off. Households are actually going to gain. And the government, the minister did mention that about 3.9 billion cedis was going into the pockets of Ghanaians. Well, I wish I could see that cash physically in my pocket, but well, that's another topic. Improve social protection and health. The government also did allocate quite some cash when it comes to NHIS and then certain initiatives they did post. For job creation, also, I did mention earlier when we started the presentation that they aim to create about 800,000 jobs. And from what we've seen in past events, such as the military recruitment and stuff, we could see that unemployment was a very big deal in the country. So the government giving initiatives to improve the conditions of households, which will put more pockets, which will put money in their pockets, is also a good initiative. For businesses, tax reduction. This is different from the tax relief I mentioned for individuals. So for this, I'm referring to the tax reduction when it comes to the VAT. So you realize that the VAT was reduced to about 20%, which is also good for businesses because now it puts a bit of relief on their neck. Reduced borrowing costs. Going into the future, we've seen that inflation has been pegged about to around 8 plus or minus 2%, which is going to also influence the decision of the Monetary Policy Committee. I'm very confident that in their session next week, they are going to cut rates. And going into 2026, if inflation is actually going to be stable and they are going to have an outlook based on even global happenings, they are actually going to reduce NPR, which also in effect trickle down to GRR, which means that businesses are going to have quite enough room to borrow, to expand. And for the women also who are into the businesses, they also have the Women's Development Bank coming in to also support them with little collateral per the engagements the minister had with women in the market. There's also infrastructure and logistics improvements. For the infrastructure allocations, you realize that they also had allocations for road, for rural imports. So rural imports to the main cities. You realize that the government did have allocations for improved logistics, so that farm produce and other agricultural products will be able to transport it easily into the cities and also exported in the cases where these products have been exported. There are also sectoral incentives. For investors, which I'm sure all of us are investors one way or the other, and if not for anything, I'm sure there's a conversation also around negative returns and positive returns when inflation was still high and the rates of the treasury bills were being dropped. Investors are actually going to be more confident giving their money to government because we've seen that government has been a good caretaker of the public finance first. They've actually been good at fiscal spending and they've been prudent actually. So investors are actually going to be comfortable giving their money to them because now there's value for money. There's also going to be the domestic market revival, which is very key because now we've moved from the times where investors were doing just T-bills. I mean, the past 2 years, 3 years, we've seen that investors have basically stuck to the fixed income space, doing repos, doing T-bills. But this year, if not for anything, has been a very interesting one. We've seen bond yields that were trading in the highs becoming very attractive, and for the fact we've seen CISs, that's collective investment schemes on the markets, returning. I've seen a collective investment scheme return about 50%, which is very good because I mean they do hold bonds in their portfolio. Week on week, we've also seen bonds trading. And I think just last week, we saw the 32 papers and then 27 and 34 papers also trading the more. Yield curve has actually come in low to about 14 to 16 ranges. The equity market has also seen a good, or maybe let's say tremendous gains this year, because when rates were dropping on the fixed income space, when TB was dropping, when the NPR was dropping its rates, you realize that our markets was now becoming more of a matured space. They were becoming reactive. So you realize that people were moving money into equity instruments. Just for numbers' sake, the Ghana Equity Total Return, which is an index built in-house, which has the performance of the Ghana Stock Exchange, have returned 130% year to date as of last week. That's just in CD terms. In dollar terms, because of the appreciation, the Ghana Equity Total Return had returned about 210%. And this is actually good news for investors who had invested in the stock market, that's the Ghana stock market, earlier this year. This return is actually way better than what the US stock market had actually done this year. These gains are also driven mainly by the financial stock index. We've seen that the financial stocks have also rallied because they are seeing a bit of recovery from the GDP levels, and investors are quite happy because of these improving conditions for these banks. So basically, for investors, it's just good news for them. The domestic market is also going to be revived next year, because you find out that yields will not be attractive on the fixed income space. That's the T-bills and repos. So most likely the bond markets will become very attractive. Lastly, FX stability. FX is a very key thing, which I'm sure we've spoken about time and on time. FX stability has been also a key thing for planning. And I'm sure the Cocoa Board CEO in one of his interviews was like, he called the minister earlier this year and was like, the FX rate was dropping so quickly that he couldn't plan, and that the minister told him he should plan at 11. The week after, FX had dropped to 10. Now, the very huge appreciation of the CD was a very big deal when it comes to planning. But however, we've seen that FX has stayed stable over the past few months. FX stability here was also a good thing, and it will solve the problems of most people, because Bank of Ghana has come in with a policy saying that they are going to be more transparent when it comes to their forward auctions, stating the amount they are going to even give as forward auctions even before the auctions. They were also going to implement a framework where banks were going to take the proceeds of exports. They also did mention that for FX, they were going to allow markets to actually determine rates. They were not going to influence it like how they were doing earlier, probably calling it a knee-jerk reaction. They were going to give good reasons before they actually intervene in the market. So we see going forward that FX is also going to be a good or a positive thing from this budget. But this is where my concerns lie for the drawbacks in the budget. There is so much hinged on commodities. If I say commodity, in the minister's presentation in Parliament, there was so much hinged on commodities, that is gold, cocoa, and crude. This is a very big problem for me because it's hinged on price. This is global price, not price set internally. S&P stated in their reports when they upgraded Ghana to a B minus, stating that we actually were benefiting from favorable prices from exports of gold and cocoa. That's in 2025 due to global happenings, which also boosted Ghana's gross foreign currency reserves to about 8 billion cedis. No, sorry, $8 billion, up from $6.8 billion in 2024. Also, S&P stated that central bank building fiscal gold reserves was also good. However, it was also good for them to explore other options, because currently the gold holdings, or the reserves of the central bank was 40% constituted of gold, which is also very key in terms of how the central bank manages this portfolio, because in terms of value, it can reduce in the cases where these commodity prices fall, which is also a vulnerability. It's a huge risk for our reserves. Let's not forget that reserves also give a bit of confidence and ensure stability. And we've seen that across various economies. When countries are seen to have strong reserves, investors don't mind giving their money to them because they know that there's a bit of stability and there's a bit of fallback in cases there's any outfall from the global economy. Gold production has also been on a very high end. We've seen about 60% of the total gold production coming from the gold board, that's the small scale miners, which has also been driven largely by price. The $8 billion which gold board bring in this year alone was all because gold prices were high. In the cases where gold prices fall, in the cases where cocoa prices fall, government revenue, the value of central bank reserves are going to decline, which is a very big drawback in this budget. So that's also something investors should take note of and industry players take note of. The government seeks to diversify into oil palm, but that is yet to be passed even in parliament. There's also monetary easing and inflationary pressure. Um, Inflationary pressure still exists globally, which we've seen that there's been monetary easing from the US, even in the US market, and on the local front, we've seen easing. However, the BOG will have to take a cautionary stance in terms of inflation, monetary easing, so as inflation doesn't blow out in the case where they do cut rates aggressively and then now they have to raise it again. There's one interesting thing about this budget, which I don't think the minister did mention. For our debt negotiations, we still have a bit of a lag or a bit of an issue. There are there are two institutions which are we actually not okay with. The ministry is still in negotiation with them. That is the African Export Import Bank and then Eastern Southern African Trade Development Bank. These two institutions have not come to agreements with the Ghana Official Creditor Committee. And if this also drags out, this means that our structural negotiation for our debt is also not going to be complete, which is also going to pose a risk for our economic outlook going forward. There's also a dependence on agricultural stability, which in this budget was also a thing that the minister did mention. There's a lot of investment going into that front. But when you look at GDP numbers from earlier this year, even the last GDP numbers, you realize that a chunk of the performance or a chunk of the economy is hinged on services sector. Which services sector breaking down and you look at it, you realize that it's coming from the technology sector. Um, if they are going to invest in agriculture, it hasn't proven so far so good. It hasn't proven the yielded results. Hence, if the government is going to do that, they will have to prove to us why and how they are going to do this. Not just allocating money to these sectors, but they have to also show how they are going to do it in real life. Lastly, revenue. The government always talks about revenue being a key thing in budget implementation. Revenue wasn't met in the mid-year budget review. It was actually down, and they've gone ahead to eliminate certain levies. COVID levy is gone, e-levy is gone, betting tax is gone. This is also a very huge risk we do face, revenue underperformance. If the government is not careful, they are going to underperform in terms of revenue, which will mean that all these things we've spoken about would not come to light or not see the light of the day. A summary of the presentation. I've spoken a lot, and I would like to sum it up. If not for anything, out of this presentation, it's going to scream across all my slides that implementation will be very, very key. How we are going to max revenue generation, how we are going to make sure that tax cuts are not going to hurt revenue generation, the minister will really have to do a good job on that. It is not just about fiscal prudence, being disciplined when it comes to debt stabilization and the likes, but revenue generation is also very key. They've done a few VAT reforms, which I wouldn't say few, but they've done quite enough VAT reforms, which are impressive. Businesses are going to be happy, but the bottom line of government, will that be affected? This is also going to be very key. Lastly, I think just last week, IMF did issue a report saying that Ghana is far below its tax potential in sub-Saharan Africa. Ghana's tax to GDP currently stands at 13%. And in advanced economies, I haven't heard or haven't seen so far that governments are reducing their tax or they're cutting tax. And this is probably just propaganda from my point of view. But I believe that tax have intended purposes. And hence, if government is going to achieve its intended capex objectives, they have to implement certain tax reforms or maybe tax policies. And this is where I have an opinion that there's a cat in the bag which is not being let out yet. The cat being in the bag being a tax. 2026, new taxes weren't announced, right? But 2027, 2028, where the budget seeks to address a lot of debt repayment, there will definitely be the need to introduce new tax. And I'm sure when we are presenting during that budget, we would do mention that, and it will be very good to. I mean, if we are right, it's fine. But if we are wrong, I strongly believe that the government will have to come up with new tax initiatives. They will have to explain to Ghanaians why they are introducing these tax and how it's going to help boost revenue generation. Lastly, for institutional accountability, this is corruption branded, basically. This government has shown goodwill, saying that they are going to be very keen on corruption, they are going to be very um, keen on slippages. They're going to make sure that the revenue generated at various points are going to be maxed out. And this is something they've done well at. And I hope complacency doesn't set in for the minister, and I hope that the government doesn't become complacent. If they're able to ensure that accountability works and able to curb these slippages, I believe the 2026 budget will actually not just be a policy statement. It will be something that ASO Forsen will be remembered for, and then the statement ASO is actually Forsen will come to stay. This generation wouldn't remember Forsen for the minister who started well and ended badly, who started well, and then the statement of if IMF is around, the government does well. If government starts their first year, they do well. But ASO Forsen will actually be remembered for a good 4-year term. And in case the good people of Ghana decide to give an additional 4 years, they will know why they give this government the mandate. So I think on this note, I would like to bring my presentation to an end. If there are any questions, I'll take them. If there are any suggestions, if there are any contributions, I will also take them. Thank you very much for your keen attention. And let's be over to you.
All right, thank you very much, Isaac. That was a very good analytical presentation. I think you've stuck with the time, you delivered in time, and then yet you were able to touch on all of the salient points. All right, so audience, the floor is open now for comments and contributions. If you would like to share your contribution through voice, you can simply raise up your hand. We would unmute your microphone so that you deliver your contribution or your question. If you would also like to put it in the chat box or the Q&A window chat, that's also permissible. You can do same. But let me also remind us all that even though no new taxes were announced in the 2026 budget, we shouldn't forget that in the earlier budget that the minister read, he actually increased the growth and sustainability levy from 1% to 3%. Also, the sunset clause on that levy was 2025. However, he has actually extended it to 2028, and that kickstarts right after the sunset clause. So that's also a revenue stream which is actually going to continue. Also, given the fact that they've reduced the VAT, is also to ensure compliance. They believe that that would help broaden the tax net and then also compliance. But one thing I believe we could also employ would be property taxes. We need to actually look at that area very well, because at least everybody lives somewhere. Everybody lives in a shelter. So if we are able to launch property tax and then implement it very well, I think that is also going to be a very good revenue stream for the government. Yes, the floor remains open. You can raise up your hand and your microphone would be allowed, or you can put your question. All right, so Daniel also added that the road tolls as well is also going to be another revenue stream. And that reminds me of another one, which is the special import levy. That has also been extended. So that's also going to be a revenue stream. So I believe they have their hands on something. All right. So while people are actually considering their questions or contributions, kindly pardon me to also elicit your views in this brief polls. With that said, I would like to thank you very much once again on behalf of Black Star. We appreciate your time and your continued interest in Market Color. Market Color has been running for the past 3 years. We hold it every third Tuesday of the month. We usually discuss market updates and any trendy topic on the markets, and it brings thought leadership process and other people like yourselves for us to discuss. So whenever you join Market Color, we would expect to hear from you, your contributions, your questions in order to shape the discussion. Thank you so much. My name is Ernest Edu Owusu. Our presenter for today is Isaac Isel. We hope to see you in December for the final edition of the year. Thank you very much and bye bye.